Alright, what's up, y'all? Hope you guys are having a great day. Hope you guys are having a great trading week. I know I didn't post a video last week. I meant to post this breakdown last week, but I just had some other things come up and didn't get around to it, so sorry about that. But I will get back to, hopefully post on that weekly basis for you guys. But wanted to post this USD JPY breakdown, and this is not going to be my 5-minute and 15-minute supply and demand strategy. This is going to be the higher time frame strategy that I'm sort of working on, developing the confluences for, things like that. So I don't have the full strategy like 100% proof ready yet, but I wanted to show you guys this trade and why I got into it. And I think quite a few other people, from the looks of it, caught it online as well. I just happened to see some other people post about it, like on Instagram and Twitter and stuff like that. But so this is USD JPY on the 1 hour time frame, like I said. So let's go to the 4 hour just to show you guys kind of what we're working with here. So I'm going to minimize this a little bit. I don't know why that data window is open. Let me push this. Okay. All right, so this is 4 hour time frame, right, on USD JPY. So we have huge bullish momentum here. Obviously, UJ has just been flying for quite a while now. As you can see, I mean, it's just been moving, and this is all the way back, in January. Since January, this thing's just been moving up. Of course, there's ebbs and flows of it going up and down, but it's just been moving up bullish, strong bullish momentum. And there's this area that I identified here that the market has rejected quite a few times. So it rejected here, came back to the downside, rejected here, came back to the downside, broke above, came back, retested, broke up bullish. Okay, that's a good indication. So now we continue the bullish structure, right? Continue this bullish momentum, and then we come back down all the way and retest it. Now, if you guys watched my last video, which was another higher time frame video, you guys know that this is similar to that trade idea in the sense that this is a counter trend move. As like in the short term, this has just been straight bearish, so I'm not looking to hold this forever, right? But we are bullish overall, right? In the grand scheme of things, we are bullish. UJ has been bullish. It's been heading up for quite some times now. Just so much bullish pressure, right? So we had this huge retest here of this confluent area that has had at least 3 touches, right? That's very important. I don't like to go off areas that are touched like once or twice. 3 times to me at least is 3 is really my perfect zone. If it's been tapped a bunch of times, like 4, 5, 6 times, a lot of times that's when the next time it breaks, or next time it touches that area, it's just going to break through. But we had that bounce right off of here. So I entered this trade right as it was approaching this zone, right? It's approaching this 4 hour, 1 hour, just higher time frame zone of structure. And if you guys know anything about structure, you could see this on the 5-minute time frame, on the 15-minute time frame, on the 1-minute time frame, on the monthly time frame, right? Structure is structure. It is the same on every single time frame. So you could apply this strategy to multiple different things, but I'm just testing it and seeing how things go with that longer term swing trade type of move, right? So I enter this trade on this structure. I give around a 50 pip stop loss, and this is on the Thursday, right? So I'm entering this thinking, okay, let me go back to the 1 hour. This might be a trade I hold over the weekend. I'm going to see how it goes. And that's kind of the mindset I had, right? But again, I know that we've been so bearish that it could have a tiny rejection here, or it could have just broken through and hit my stop loss. So I did not risk a ton on this trade. I took this on a challenge. I risked 0.5%, and I caught a little over 1%. And I will give you guys an update, probably the next video, on the few funding challenges that I've been taking. They're going pretty well, and I would love to update you guys on that, but probably in the next video. As this video, I'm just going to stick strictly to this breakdown. So areas of confluence, right? One, we had just basic structure. We're bullish going with the overall trend on the higher time frame, right? So we're in buys. We have the structure bounced off 3 times. Boom, we touch, we go, and then we catch this move. Another confluence. And this is on the 1 hour and the 4 hour, right? So look at this. We have, and I'm not sure how well versed you guys are with using the RSI or anything like that, but this is another thing. So we have divergence. This is bullish divergence right here. So as you can see, price where it's at right here at this point is higher than it is at this point, right? This is a low, and this one is higher up. And here on the RSI, this point is lower and this point is higher on the RSI. So this is going down, this is going up, this is bullish divergence, signaling that price is probably going to move up soon, right? And it could happen a few times before it actually plays out, but that was just another confluence because we're at a confluent area in the market, being that 1 hour, 4 hour, higher time frame structure. Just an area of interest per se, right? So that was another thing. Another one is that we're breaking out, which is, you could call this a shark fin, right? You guys may or may not be well versed in what shark fin is or anything like that, but basically where you're oversold or overbought in the RSI. And this is the RSI, and there's a few different RSIs out there. I'm still debating and testing some different ones, which ones I like and which ones I don't like, but we have a breakout, so we know we're oversold in this area, right? We're not up here, we're not overbought, we are oversold. But you wouldn't take a trade off of just one of these confluences alone. This is multiple confluences, so that's structure, bullish divergence on the RSI, and then the shark fin on the RSI, or being oversold on the RSI. You're predicting that this is going to come back up and start the bullish momentum yet again, right? And so I took this trade, and let me minimize this a little bit more. And I took the trade out right up here, basically just kind of equaling these highs that it had over here. Now this trade could have just kept flying bullish, or it could have bounced off of this area and just continued bearish as it had been bearish for, all this time up here. So that's why I didn't hold it, over the weekend, or try and hold it for weeks or anything like that. I think if I was still in this trade, and still had the same stop loss, I would still be in it. I wouldn't have gotten stopped out by now. So actually I can go to the present, which we're at the 18th. So that's right here. So now we're in the present. So it actually it went up a little bit higher. It came back down to this order block, or this demand zone here, which is my other strategy, and flew off. That could have been even another entry, just another tap of this market structure as well again. So I still would have been in this trade, still would have been profitable, right? Still could have been holding it. But this, like I said, I took this last week on Thursday, so I didn't want to hold it over the weekend. So I got out. This was Friday afternoon when I got out. Friday afternoon, a lot of times if I'm not like super confident that the trade is just going to continue up for the next weeks, right? Or next week. Plus, you always have that risk if you hold it, then on Sunday when market opens up again, that you're going to have a big gap in the market. So it could have gapped down, and then there goes half my profit. Then I would have been like, dang, I should have just took it out on Friday. If you've been trading for any long amount of time, you know what I mean. But that was this trade. It was really simple. It was a little over a 1-2. I caught 115 pips. And lately, honestly, on UJ, I've been catching like 75 to 100 pips per trade on UJ. This is with the higher time frame strategy. Of course, not on my 5-minute strategy. That would be insane if I was catching 50 pips to 75 pips or 100 pips, on a 5-minute strategy. That would be crazy. That'd be awesome because I'd have tighter stop losses. But this was a nice trade. I love that 1-2, 1-3 risk to reward ratio. That's like my sweet spot. Just because you can win only half of your trades, 50% win rate, and you're still profitable by far, right? So it's a lot better than those lower time frames 1-1s, where you can still be profitable 1-1. Don't let anybody fool you, but it is a little bit less stressful and a little bit more easygoing on the mental, for me at least. And this is just in my opinion. Everyone's different. Having that 1-to-2, 1-to-3 risk to reward ratio, knowing that you can lose half your trade and still be profitable, it's just, you know, it goes a lot better for me. So I hope this made sense. Let me know if you guys have any questions down below. Subscribe if you guys got any value out of this video. If you guys want to continue seeing any breakdowns, again, I'm still kind of honing in this strategy and figuring out exactly, you know, my key confluences for it. But the main 3 confluences that I focused, just to kind of reiterate on this one again, was market structure, which again, you can do this on any time frame, but for this higher time frame strategy, the market structure, the area of interest, right? That's 1. 2 was that divergence, this bullish divergence on the RSI. 3, it was oversold or had a shark fin coming out of the bottom of the RSI, signaling that we were going to continue bullish for a little bit. So that was this trade, 115 pips on UJ. Let me know how you guys' trading week has been. I'm really curious. And again, like this video if you got any value out of it. I'd really appreciate it. Thank you guys so much for supporting me thus far on this journey, and I will see y'all in the next one.